Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies, Palantir Technologies, and Tesla stock. To begin, we'll be analyzing an article titled Sofi Stock Bear versus Bull. So we'll be going over their negative updates as well as their positive updates to see if they counteract or balance each other out so you can make an informed investment decision on this overall company. After that, we'll talk about proper risk management using applied digital regarding when to take profits, how we should properly allocate ourselves to a company, and what to do after a company surges initially so we can cover our bases and invest properly while making loads of money. But we want to do this safely and consistently, so I'll be using this company as an example. Next up, we'll talk about Palantir Technologies regarding how Cathie Wood has consistently and plans to buy more Palantir Technologies in the future. And we've already touched on this multiple times, but this is acting as a phenomenal catalyst for the PLTR share price, which is increasing right now because this catalyst has led to another catalyst regarding how a Brazilian company is using Palantir's artificial intelligence technology to optimize their overall product purchasing and inventory restocking process, which is extremely positive, which is why the current share price is surging right now by around 13%, because these catalysts have literally stacked on top of one another, which is fantastic news. After that, we'll talk about how Tesla stock is rallying again and how Ford may have something to do with this. Lastly, we'll go over the top 5 reasons why Tesla stock could continuously rally into the future and why right now may be a good time to purchase some more Tesla shares. However, I personally think the TSLA shares will pull back slightly before its next surge, but the next surge could definitely be soon. So for more news updates, analysis, stock reviews, and price targets for Sofi Technologies, Tesla, as well as Palantir Technologies, don't forget to go and annihilate that like button right now. Comment your thoughts down below about what companies you want me to report on more of. Subscribe if you are new. Don't forget to go and annihilate that like button right now, and also press that join button next to the subscribe button to support me personally for as little as 99 cents, so you won't even feel it, and that's what keeps me here on YouTube so I can continue to make videos just like this for you. But with that being said, let's jump right into today's stories. As you already know, Sofi Technologies essentially operates as a digital bank, and we're going to dissect the bearish arguments and the bullish arguments, whether or not investors should not invest into this company or sell their shares, or we're going to talk about the bullish positive updates regarding how investors should either hold their stock or even purchase more as time goes on. Right now, Sofi Technologies, ticker symbol SOFI, trades for $5.46, while experts believe the company on the bearish scenario should be worth $2.50, which I think is too low. However, on the bullish scenario, they believe the company could surge up to $10 per share. As for me, I believe over the next 12 months, the company could reach an $8 price target. So definitely keep that in mind, but always make sure to do your own research. So let's start off by analyzing the bearish argument, which I will also address line by line. The first thing is that the author highlights for the bearish argument that Sofi is a digital bank, but they don't offer anything exclusively or new in regards to their competition. Essentially, other banks offer the same products and services as Sofi Technologies, such as savings accounts, personal loans, credit cards, and many other things. So Sofi is not necessarily unique in this aspect. However, my pushback on that would be, yes, Sofi does offer similar services, but their services are better and or enhanced. So although there is not a lot of new services or products that Sofi offers that other banks don't, the products themselves are better. For instance, for their checking and savings accounts, they offer higher APYs and returns and interest on the money that is in their accounts compared to other banks. Their personal loans and student loan refinancing has lower overall interest rates compared to their competition. And a lot of their other products and services that they offer are just more enhanced and a better overall deal compared to other banks. The next Sofi argument is that Sofi has yet to produce profits, which is true. However, according to recent projections and estimates, the company is supposed to be profitable by the end of 2023. So although I agree that investors should be more cautious investing into companies that aren't profitable, this company is projected to become profitable by the end of the year. And once they actually make due on that promise, the share price should actually surge upwards. Next up, the author has highlighted that they have high net losses coming in at $34 million, but he does give them credit because this is actually a much lower number than what they brought in previously for their net loss a year ago for the same period, which was $110 million. So clearly, Sofi Technologies is radically improving on their overall net losses, which eventually will lead them toward profitability. Lastly, the final bearish argument is that they are slowing down in their overall growth significantly. Originally, their adjusted revenues increased by 43%, but now it's expected to rise in the current quarter between 32% and 35%. However, this is just natural. According to the law of large numbers, the more revenue you bring in on a percentage basis, that is going to decrease as time goes on. So this is absolutely no surprise. So honestly, all of the bearish arguments can easily be addressed. Now let's move on to the positive arguments. The first compelling argument for Sofi Technologies is how they handled the banking crisis. This company and their management very tactfully maneuvered through this financial banking crisis very efficiently, to where consumers were taking money out of other banks, and this was actually good news for Sofi Technologies, considering that various customers fled other banks and actually increased Sofi's overall deposit balances by taking money out of their previous bank and becoming a member of Sofi Technologies, and then they put their money into Sofi Technologies through a deposit in a checking or savings account. That's why their deposits over a 3-month period jumped from $7.3 billion up to over $10 billion, which is very good. And the main reason for this is because of their FDIC insurance was increased to $2 million instead of just $250,000, meaning that 97% of deposits are insured at Sofi Technologies, and that's why customers who had money in other banks fled toward Sofi Technologies for this phenomenal safety. On top of that, the author highlights how 98% of their loan book consists of personal loans and student loans. But I actually think this should be in the bearish argument, considering that the personal loans have not been able to be sold off to other institutions, although they are getting a lot of income through interest from these personal loans held on their balance sheet. However, if anyone were to default on these personal loans, Sofi would be floating the bill for this. However, like we discussed in our last video, that is very improbable for that to happen. Another positive update is that they have been growing their members very efficiently, up 46% to 5.7 million customers. Lastly, management anticipates that their adjusted revenue will grow for this year between 27% and 31%, so anything above a 30% CAGR means that they are a rapidly growing company, and that's exactly what Sofi is anticipated to bring in, on top of becoming profitable at the end of the year. So this is a very positive news update. Now, what really surprised me is that this financial reporter at the end of the article says that the bear case for Sofi Technologies seems brighter, meaning that investors should sell or not enter into a position for Sofi Technologies. But given the evidence that he stated, it seems absolutely crazy to side with the bearish case here. If you look just at the raw data evidence and numbers, clearly there is more reward than risk here. And his main reason for siding with the bears on this is because of their net losses. However, if you were to look at current projections and estimates, they will become profitable by the end of 2023, or at minimum in the beginning of 2024. So I don't think this was a very good analysis. It's like he didn't even read his own article or look over the financial projections for this overall company. I am completely dumbfounded about this. However, with that being said, you should always lower your allocation to singular risky growth companies. However, with that being said, I personally only have a 4% allocation to this company because, after all, this is a singular risky growth company, and I don't anticipate to ever have more than a 5% initial allocation for this particular company, because anything above that would be improper risk management. Speaking about risk management, let's talk how to have proper risk management by using Applied Digital as our overall example. If you're not familiar with this company already, don't worry, we're not doing a whole review or analysis on this company. However, just to give you some context, Applied Digital operates many data centers across North America, and they provide digital infrastructure solutions to the high-performance computing industry, also known as HPC. The company also provides substantial power to blockchain infrastructure, ergo Bitcoin mining and other types of mining for cryptocurrencies, and they also are involved into artificial intelligence. Recently, this company, ticker symbol APLD, has surged year-to-date by 320%. Now, this is going to be a good example of how to properly manage risk once a company increases. We manage risk risk by taking profits off the table. As soon as a company surges by more than 100%, you instantly should take profits so you can get back your initial investment. And then from then on, you can let the rest ride and even nibble and take some more profits off the table. Therefore, your initial money or your initial investment has already been recuperated, so anything else is pure profit from that point forward. You can then take your initial investment, which should be no more than a 5% allocation, and invest it into another company until that company surges more than 100%. You take that money back out, and then you let the rest of that position ride for the long term. And this is literally one of the safest ways to invest. Moving right along here, let's talk about Palantir Technologies, ticker symbol PLTR, in regards to how ARK Invest and Cathie Wood is loading up on Palantir shares. And it looks like she is continuously investing into this company. She has invested into Palantir and added it to her ETFs, such as her ARK Innovation ETF, ticker symbol ARKK, her ARK FinTech ETF, ticker symbol ARKF, and her ARK Next Generation ETF, ticker symbol ARKW. Now, I personally have no idea why she has put Palantir into her ARKF ETF. However, I do understand why she would put it in the ARK Innovation ETF, ARKK, and the ARK Next Generation ETF, ARKW. For me personally, my favorite ARK investments would be ARKK and ARKG, but that is a whole nother video. So I just want to make sure that you are in the know about how Cathie Wood of ARK Invest is investing into Palantir and adding it to her ETFs. However, let's talk about why the PLTR stock is surging right now, and that's because Palantir announced that they developed an integrated management flow system using their Palantir Foundry platform. Essentially, this software will help this other company named C&A reinforce their overall assertiveness and speed of inventory through alerts regarding restocking products in their portfolio of best-selling products, and it's also going to optimize their overall supply chain, making them more effective and efficient, which is going to increase their top and bottom line. Over the course of 3 months, Palantir implemented their entire workflow of ingestion processing, and they generated purchase recommendations for all of their best-selling products, including generating them new models of how to optimize these products for pricing and their overall supply chain. Palantir's software is literally the backbone of multiple supply chains across the entire globe because they help companies optimize inventory management, help build better and more resilient supply chains, and they also position companies to be more resilient in times of economic volatility and geopolitical uncertainty. So overall, it just shows the diversity, the adaptiveness, and the resiliency of Palantir's Foundry and commercial segment. And with Cathie Wood of ARK Invest buying Palantir, and then this catalyst coming out of them helping and landing a new contract with one of the world's largest retail chains, this has acted as a phenomenal catalyst for the overall share price, and that's why it is increasing. However, after an increase more than 10%, we should also see a pullback in their overall share price, so be aware of that. And if you plan to invest into this company, wait for the pullback. Do not buy at all-time highs. We want to buy low, sell high, not buy high, sell low. And that would be in terms of their overall share price. Next, let's talk about Tesla's TSLA stock and why it's rallying lately. Tesla stock is up again, and it's no coincidence that the Tesla stock is up right after Ford hosted their investor day. Tesla's CEO Elon Musk also deserves credit for Tesla uptrending over the past few trading days because he recently reestablished trust in himself and the brand after making comments how he is ushering in a new Twitter CEO and he will spend less time at Twitter and more time on Tesla, which is a huge relief to investors of Tesla. However, how does Ford's investor day positively impact Tesla? Well, here's why. Ford is actually providing a very great influence on Tesla's gains. You would initially think that more competition between Ford and Tesla regarding Ford's electric vehicles might seem to be a bad thing, but Ford's commitment to producing electric vehicles actually furthers the overall thesis that electric vehicles are the future and they're here to stay. For me personally, I actually think hydrogen vehicles are better than pure electric vehicles, but that is going to be a whole nother video. So I personally am investing into hydrogen fuel cell technology and a little bit of electric vehicles. Tesla stock might also be breaking out, technically speaking, because they might test their 200-day moving average, which is currently about $202. And if they overtake that, that is going to become a new support level, and it seems that the Tesla share price could surge from this. Lastly, let's talk about 5 really positive news updates that have come straight from Elon Musk and Tesla's management. Number one is Elon Musk is spending more time at Tesla and less time at Twitter, like we just mentioned. Number two, Tesla is going to start advertising for the first time. They're just going to try a little bit of advertising, which hopefully will increase demand, and that would reflect very positively in their overall revenues, and of course their overall share price, because it's going to invigorate investors. Number three, Tesla could theoretically sell cars for zero profit on purpose, but why would they do that? Essentially, if you're not familiar, Tesla is an electric vehicle company, and they have one of the highest gross profit margins in the entire automaking industry. Tesla right now has gross margins coming in at around 19, which compared to Ford only has a 15%, and General Motors has around a 13%. However, in the past, Tesla has had an extremely high gross margin of 32.9%. Number four, autonomous driving could come in 2023, and it will change everything. By installing their autonomous driving software to different degrees, this is going to usher in the ability for Tesla's robo-taxis. And essentially, when you are not using your car, you can opt in for your Tesla vehicle to become a temporary taxi for people. So while you're not using your car, your Tesla vehicle could be somewhere else being used as a taxi, being completely driven automatically by the car itself, making you money. So literally, while you are at work for 8 hours, your Tesla car could be out for that 8 hours making you money, and then it's going to return to you at a specific time. This is absolutely insane, and Tesla said they would split the revenue 50-50 between Tesla and you making money from this, or even 70-30 to where you are making 70% of the overall revenue and Tesla's only making 30%. So the fact that your Tesla vehicle could be making you money by just owning a Tesla, by operating itself as its own robo-taxi while you are somewhere else or not using the vehicle, is absolutely insane. And ARK Invest has simulations and projections regarding how there's a 55% chance that Tesla's robo-taxis could be active as early as 2023 or 2024. I personally think it's probably going to be sometime in 2025, but Cathie Wood of ARK Invest believes Tesla will attain through their robo-taxis a market cap of $6.1 trillion or a share price of $2,000 by 2027, given the amazing growth from these developments. So if Tesla does end up making vehicles for only $20,000 to $25,000, you're going to be able to make money through these vehicles regarding their robo-taxi options, and Tesla is going to be making loads of money from investors as well as customers buying into their autonomous driving technology. So overall, Tesla is absolutely set to surge and boom well into the future. So I'd love to hear your thoughts down below about Sofi Technologies, Palantir Technologies, and Tesla stock. Don't forget to annihilate that like button, become a member of this channel to support me personally, subscribe if you are new, and I'll see you in the next YT video.